Hey everyone, welcome back to the channel. Today we're diving into the latest developments in the stock market, examining why stocks have been losing value, what this means for the US and global economies, and most importantly, identifying risks and opportunities for investors like you. Stick around for actionable insights. The stock market has taken a significant hit recently. On Monday, Wall Street saw its largest drop of the year. The S&P 500 fell 2.7%, marking a nearly 9% decline from its peak last month, inching closer to what's defined as a correction, a drop of 10% or more from recent highs. The Nasdaq Composite suffered even worse, plunging by 4% in a single day, its steepest drop since 2022. Tech stocks have been particularly hard hit, with Tesla down 15.4%, Nvidia falling over 5%, and declines across major players like Meta, Amazon, and Alphabet. This sell-off has wiped out $4 trillion in market value from the S&P 500 since February's peak. What's driving this chaos? Let's break it down. One major factor is uncertainty surrounding trade tariffs. President Trump's fluctuating policies, threatening tariffs one day, suspending them the next, have left businesses and investors scrambling for clarity. These tariffs on imports from China, Mexico, and Canada are expected to raise prices and slow economic growth. Another concern is inflation. U.S. inflation has hit 3%, exceeding the Federal Reserve's target of 2%. This is increasing borrowing costs and reducing market liquidity. Finally, recession fears are escalating. Key indicators like labor market data and consumer confidence surveys suggest economic softening. The Atlanta Federal Reserve's GDP model even predicts negative growth for Q1 2025. So what does this mean for the U.S. economy? The immediate impact is clear. Increased uncertainty is causing businesses to delay investments and consumers to tighten spending. This could lead to slower growth or even a recession later this year. Globally, the ripple effects are significant. Asian markets have also seen sharp declines due to fears of reduced demand from the U.S., while European economies are bracing for higher costs on exports due to tariffs. Economist Mohamed El-Arian noted that investors underestimated the potential for trade conflicts when Trump first introduced his policies. Now they're recalibrating expectations, and not in a good way. Let's talk risks. First off, volatility is at an all-time high. The S&P 500 has swung more than 1% up or down 7 times in just 8 days, a clear sign of instability. Second, valuations remain elevated despite recent declines. The S&P 500 is still trading at over 21 times projected earnings, well above historical averages, suggesting there may be more room for correction. Finally, geopolitical risks like tariffs and potential government shutdowns add layers of unpredictability that could further shake investor confidence. But it's not all doom and gloom. Market downturns often present opportunities for savvy investors willing to look beyond short-term noise. Here are some strategies. First, buy quality growth stocks at discounted prices. Companies like Amazon and Nvidia have seen their stock prices fall but remain strong in fundamentals like cloud computing and AI innovation. Second, diversify internationally. Consider ETFs like Vanguard Developed Markets ETF, ticker VEA, which offers exposure to financially stable companies outside the US, particularly in Europe and Asia-Pacific regions where valuations are cheaper than American counterparts. Third, invest in defensive sectors. Stocks in healthcare, for example, CVS Health, and consumer staples, for example, Philip Morris International, have shown resilience amid market turbulence. And last but not least, explore emerging growth areas. Cybersecurity stocks continue to benefit from long-term demand trends despite short-term dips. Companies like Okta or Palo Alto Networks could be worth watching. While short-term risks are undeniable, history shows that markets recover over time. The Federal Reserve may step in with interest rate cuts later this year if economic conditions worsen further, a move that could stabilize markets and spark recovery. As an investor, it's crucial to stay disciplined during periods of volatility. Focus on companies with strong competitive positions and growth potential rather than chasing trends or reacting emotionally. To wrap up, yes, the stock market is facing challenges, from tariffs to inflation to recession fears, but these same challenges create opportunities for those who know where to look. Whether you're buying quality stocks at discounts or diversifying internationally, now is the time to position yourself for long-term success. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you don't miss future updates. Let me know in the comments what strategies you're using during this market downturn.